Last April, I sat at my kitchen table staring at a tax bill that made my stomach drop. $11,200. I'd made good money that year. 6 figures, actually. But somehow I still had to scramble, dip into savings, and put part of it on a credit card just to pay the IRS on time. The next year, same income, same client load. But this time, I wrote one check, felt zero panic, and had $8,400 more sitting in my account than I would have otherwise. Same business. One different habit. Here's exactly what changed. If you're a freelancer, a contractor, or you run a small business where nobody's withholding taxes from your paycheck for you, this video is for you. Not the 9-to-5 crowd. Not people with an HR department handling this stuff automatically. This is for the person who invoices clients, who watches their bank balance swing wildly month to month, and who has felt that specific dread of opening a tax notice. By the end of this video, you're going to understand the one shift that took me from tax season panic to tax season calm. And I mean actually calm, not I'm pretending to be calm. This isn't about loopholes or sketchy write-offs. It's about running your business like a business so tax season stops being an emergency and starts being just a Tuesday. That's the goal here. Control over your money, not just more of it. Here's the thing nobody tells you when you go freelance or start your own business. You've basically become your own payroll department, and most of us are terrible at the job. When you had a normal paycheck, taxes were invisible. Your employer skimmed them off the top before the money ever touched your hands. You never had to think about it. But the second you start invoicing clients directly, that entire system disappears, and nobody replaces it for you. It's on you now, and if you don't build a system, the money just evaporates. You get a $4,000 payment from a client. It feels like $4,000, but it's not. A chunk of that already belongs to the IRS and possibly your state. If you spend like it's all yours, covering rent, buying equipment, treating yourself because business is finally going well, you're spending money you don't actually have. Then quarterly taxes come due, or worse, April rolls around, and suddenly you owe thousands of dollars you don't have sitting anywhere. So you scramble. Maybe you pull from savings that were meant for something else. Maybe you put it on a card and now you're paying interest on top of taxes. Maybe you underpay and get hit with penalties for not paying quarterly estimates in the first place. And it's not just the money, it's the whiplash. One month you're flush with cash from a big project, feeling like you've made it. The next month is quiet. Invoices haven't been paid yet, and you're stressed about covering basics. Feast or famine, over and over, with taxes lurking in the background the entire time like a bill you know is coming but can't see the size of. This cycle is exhausting, and most freelancers just accept it as part of the deal. It's not. There's a fix, and it's simpler than you think. If you're still running your freelance income through your personal checking account, stop. Today. Open a completely separate business bank account. Most banks let you do this online in about 10 minutes, and many credit unions offer free business checking with no minimum balance. When business and personal money live in the same account, your brain can't tell the difference. Every dollar just looks like money I have. You can't see what's actually available to spend versus what's already spoken for. Taxes, business expenses, upcoming costs. Separating the accounts forces clarity. Every client payment goes into the business account first. From there, you decide what moves where. Say a client pays you $5,000 for a project. If that lands in your personal account next to your rent money and your grocery budget, it just becomes $5,000 I have. But if it lands in a dedicated business account, you immediately see it for what it is, revenue that still has obligations attached to it, not spending money. This one step alone is what separates freelancers who feel in control from freelancers who feel like they're always guessing. As soon as a payment hits your business account, split it right then before you touch a cent of it. A simple, proven starting point, 30% to taxes, and the rest split between what you need to run and grow the business and what you pay yourself. If your state has income tax, adjust that 30% up slightly. If you're in a no-income tax state, you might land closer to 25%. This is the single habit that ended the surprise of tax season for me. You're not guessing what you'll owe in April. You're setting it aside in real time, transaction by transaction, so by the time taxes are due, the money's already there. It's not a surprise bill anymore. It's a bill you already paid yourself in advance. That $8,400 I mentioned at the start? Here's exactly where it came from. The year I got hit with the surprise $11,200 bill, I had zero system. I was pulling from whatever was left over at tax time, which meant dipping into savings and financing part of the balance on a card at 22% interest. The interest alone cost me a few $100s I didn't need to spend. But the bigger cost was penalties. The IRS charges you for underpaying quarterly estimated taxes throughout the year, not just for paying late in April. Between the underpayment penalties and the card interest, that disorganization cost me real money on top of the taxes I already owed. The next year, every single payment got split the moment it arrived, 30% straight into a separate tax holding account. By the time quarterly payments and my annual return came due, the money was already set aside. No penalties for underpayment. No interest charges. No scrambling. That's where the $8,400 came from. Not a loophole, just not bleeding money to penalties and interest because I was disorganized. That 30% you're splitting off needs its own home. Open a third account, separate from your business checking and your personal checking, and label it something unambiguous, like taxes. Do not touch. Every time you get paid, that percentage moves there immediately, ideally through an automatic transfer so you're not relying on willpower. Money that's mixed in with your regular business balance always feels spendable, no matter how good your intentions are. When cash flow gets tight, and for freelancers it always eventually does, that just sitting there tax money starts looking like a solution to a short-term problem. Separating it physically, in an account you basically pretend doesn't exist, removes the temptation entirely. If it's not visible in the account you're checking day to day, you can't accidentally spend it. Imagine two freelancers. Both earn $6,000 in a slow month and $2,000 in another slow month. Freelancer A keeps everything in one account and, during the lean month, quietly borrows from what would have been tax money to cover rent, planning to make it up later. Freelancer B has that money physically walled off in a separate account from day one, so it was never treated as spendable in the first place. Come tax time, Freelancer B writes a check without blinking. Freelancer A is in the exact scenario that cost me $8,400. In the US, if you expect to owe more than $1,000 in tax for the year as a freelancer or business owner, you're generally required to pay estimated taxes 4 times a year, not just once in April. Mark those dates on your calendar now. Mid-April, mid-June, mid-September, and mid-January. When each date comes around, pull from that tax savings account you built and pay what's due. This does 2 things at once. First, it avoids underpayment penalties. The IRS doesn't just want its money once a year, it wants it spread out roughly as you earn it, and skipping quarterly payments triggers penalties even if you pay the full balance by April. Second, and this is the psychological win, it breaks the one giant scary number problem into 4 manageable check-ins. Instead of one $11,000 gut punch in April, it's 4 smaller, expected payments throughout the year. On roughly $70,000 in freelance profit, federal and state self-employment taxes combined might land somewhere in the $15,000 to $18,000 range depending on your state and deductions. Obviously this varies, so this isn't a substitute for a tax professional running your actual numbers. But split across 4 quarters, that's roughly $4,000 a quarter instead of one overwhelming lump sum. Same total money out the door. Completely different emotional experience. And no penalty charges added on top. Every quarter, right when you're making that estimated tax payment, spend 15 minutes reviewing the last 3 months. How much did you actually bring in? Is your 30% still the right number? Or does it need adjusting based on how the year's shaping up? Are there deductible business expenses you forgot to track, software subscriptions, a portion of your home office, mileage, equipment? Freelance income isn't static, and a system you set up once and never revisit will eventually stop matching reality. Maybe you landed a bigger client and your income jumped, your tax percentage might need to go up. Maybe you had a slow quarter. Good to know before you're caught off guard. This quarterly check-in is what keeps the whole system accurate instead of just being a nice idea you set up once in January and forgot about. In my case, my first quarterly review showed I was actually slightly oversaving. I'd forgotten to account for a home office deduction and some software costs that lowered my actual taxable profit. That review let me adjust my tax savings percentage down slightly and free up a bit of that cash flow for the business, instead of it sitting parked unnecessarily. Small adjustment, but it added up. I want to be clear about something. None of this required me to earn more money. My income didn't dramatically change between that panicked $11,200 tax bill and the calm year that followed. What changed was that I stopped treating my business bank account like a personal piggy bank and started treating it like what it actually is. A business with obligations that need to be tracked in real time. I think about a friend of mine, a freelance graphic designer, who used to describe tax season as the worst 2 weeks of my year, every year. She'd lose sleep, dread checking her email in case it was an IRS notice, and generally just white-knuckle her way through March and April. After she split her accounts and started the 30% habit, she told me tax season became almost boring. Her words. She just paid what she'd already set aside. That's the transformation this creates. Not more income, less panic. Let's bring it together. 5 steps. Separate business account. Split every payment the moment it lands. Wall off your tax money in its own untouchable account. Pay quarterly instead of waiting for April. And review every 90 days to keep the system accurate. None of this is glamorous. None of it is a secret tax loophole. It's structure. And structure is exactly what most freelancers are missing, because nobody hands it to you when you leave the traditional employee system. When you were on someone else's payroll, this was handled invisibly. Now you are the payroll department. Once you start treating your freelance income like a real business runs its finances, not like a series of random deposits, the anxiety around taxes and cash flow just stops being the main character in your financial life. That's the shift. That's what running your business like a business actually means. If this was useful, hit subscribe now. I break down exactly this kind of practical, no-fluff money system for freelancers and small business owners every week. No generic personal finance advice, just stuff that actually applies to how we get paid. And before you go, drop a comment and tell me, what percentage are you currently setting aside for taxes, or are you not setting anything aside at all yet? I read every comment, and I want to know where you're starting from. Next video, I'm breaking down exactly how to build that 3 to 6 month cash buffer when your income swings wildly month to month. So if feast or famine income has ever stressed you out, that one's for you. Subscribe so you don't miss it. I'll see you in the next video.